What's up, Japan Market Samurai, broadcasting fresh updates straight from Japan. Let me ask you, you're not seriously still thinking US stocks are your only path to wealth, are you? You do realize capital is already rotating out of overpriced US tech, right? And if you're missing it, your competition isn't, because while you're clinging to Apple and Nvidia, others are quietly loading up on Japan. Don't tell me you're gonna sit this one out too. Maybe you think this is just for hedge fund elites or Tokyo insiders, but that's the lie. Timing the shift from US to Japan isn't about genius. It's about pattern recognition and discipline. Anyone, yes, even you, can get in ahead of the curve with the right information. Imagine this. You spot the rotation early. You build a Japan core portfolio. You check your account in 2, then 235. And every time, the numbers go up. Not from hype, but from real, compounding growth. You're sipping coffee on a Wednesday. Dividend alerts rolling in. And best of all, you didn't follow the herd. You led the shift. I get it. You're frustrated. US stocks felt like the only game in town. Everything else looked risky or outdated. But here's the thing. The old game changed. Japan's no longer the zombie market. The headlines mocked. It's leaner, shareholder-friendly, and finally backed by real demand. Still think it's just a temporary bump? Then you're thinking like everyone else. And those people, they don't win. But I don't know enough about Japan. But what if it crashes again? But I'll wait and see. You know what those are? Losing words. The data is public. The trends are obvious. The timing is now. You don't need perfect timing. You just need to stop waiting for permission. Look, I'm not some Wall Street billionaire. I'm just someone who looked at the numbers, saw the trend early, and acted. If I can do it, reading charts from a laptop in a Tokyo cafe, so can you. No suits, no secret society, just awareness and execution. This isn't just another hot tip video. What I'm about to show you is grounded in data, valuation logic, and macro capital flows. Very few are talking about this. Even fewer understand how real it is. So if you're the type who sees opportunity before the crowd, you're in the right place. Stick around, hit subscribe now, and let's dive into the case for why the Nikkei might just hit 1 million yen by 2050, and why you'll want to be in before the world catches up. Step 1. US stocks are overstretched. A valuation reset is inevitable. Conclusion. The US stock market isn't about to explode, but it is set for a hard valuation reset. Not because the companies are bad, but because their prices have been pushed far beyond what the underlying earnings justify. This reset won't be dramatic at first, but it will be unavoidable. Reason. 1/3 of the recent S&P 500 rise came from multiple expansion, not real earnings growth. That means prices have risen faster than profits. When that disconnect widens too much, markets correct to bring valuations back to normal. Historically, this happens through sideways movement, slow bleed, or sharp drops. Example, take the Dow. As of late, 2025, its trailing PE sits around 26.7. Compare that to Japan's Nikkei, roughly 19, based on market cap weighting. And in the US, it's not just overpricing, it's concentration. Top 10 tech stocks make up nearly 40% of the index. This makes the entire market fragile. If just 2 or 3 falter, the whole thing slips. Summary. So what does this mean for investors? It means the US market is not broken, but it's stretched. And stretched markets always snap back. The smart move isn't to panic, it's to rotate. Because the capital that leaves the US, it doesn't disappear, it relocates. And where it lands next, that's where the upside lives. Step 2. Japan is structurally ready to receive global capital. Conclusion. Japan isn't just next in line. It's already structurally positioned to absorb global capital. Unlike previous rallies driven by hype or currency moves, this time Japan has the fundamentals, the reforms, and the capital infrastructure to support a long-term market shift. This is not a temporary pop, it's a foundation. Reason. Several deep structural changes have reshaped Japan's investment landscape. The new NISA program has made long-term tax advantage investing mainstream. Corporate governance reforms are pushing companies to improve capital efficiency. And foreign investors are finally returning, not for a trade, but for a trend. There's real alignment now between policy, profitability, and investor behavior. Example, you've got the Tokyo Stock Exchange pressuring companies to fix their PBRs. This has led to a wave of buybacks, dividend hikes, and strategic restructuring. TSMC's expansion in Kumamoto is a powerful signal. Global manufacturing is coming back to Japan. Meanwhile, domestic investors are funneling record amounts into the market through NISA. It's not one thing, it's everything, all moving in the same direction. Summary, the narrative has changed. Japan isn't just cheap, it's investable. For the first time in decades, Japan has both the global tailwinds and internal reforms moving together. While the world watches the US wobble, Japan is quietly becoming the most fundamentally sound rebalancing option on the table. And capital is already starting to notice. Step 3. This is not the end of a bubble. It's the start of a long-term rotation. Conclusion. What we're seeing right now in Japan is not the tail end of a lucky rally. It's the beginning of a decade-long capital rotation, from overvalued Western markets to underappreciated, fundamentally sound Japan. The idea that this is just a short-term play is exactly what will keep average investors on the sidelines. Reason markets move in cycles, and capital, especially large institutional capital, always flows to where risk-adjusted returns look best. Right now, Japan offers reasonable valuations, improving earnings, shareholder-friendly policies, and political stability. Meanwhile, US equities are expensive, crowded, and exposed. This isn't a Japan hype. It's a reallocation driven by logic. Example: look at foreign inflows. For the first time in years, overseas investors are consistently net buyers of Japanese equities. Long-only funds, sovereign wealth funds, even retail ETFs are rotating quietly. You also see it in the behavior of Japanese corporates. They're acting like they know they're being watched again. Increasing dividends, buying back shares, cleaning up balance sheets. That doesn't happen in a bubble top. That happens when a market is re-entering global focus. Samurai, let's be clear. This is not about catching a quick bounce. This is about being positioned early in what could be a generational macro shift. Most people will miss it because they're still stuck in yesterday's narrative. But you don't have to be. If you're watching this now, you're already ahead of the curve. You just have to act on it. Step 1. The Nikkei at 1 million yen by 2050. It's not a fantasy. Conclusion. The idea of the Nikkei hitting 1 million yen by 2050 sounds wild until you run the numbers. This isn't a meme dream or clickbait headline. If you zoom out, factor in compound growth, and understand the structural drivers, that target is not just possible, it's mathematically reasonable. Reason? Let's do the math. To go from 5,000 to 1 million yen in 25 years requires a compound annual growth rate CAGR of about 12.7%. Now break that down. Ranni로의 코스 XP. Ramroad 2-1. Answer 1. Answer. This is 몇 분 받았으면 서로 담양내고 분액. Ramroad 12% from buybacks and dividends. 12% plus slight PE multiple expansion. And the rest? Currency effects and global capital inflow. None of that is outlandish. In fact, it's already underway. Example. Japan's corporate profits are rising. Not through gimmicks, but through genuine investment in R&D, factory upgrades, and automation. TSMC's fabs in Kumamoto aren't just symbolic. They represent a physical return of industrial strength. On the investor side, permanent NISA reforms are locking in long-term capital. And globally, institutions are diversifying out of the US. Japan is now on the buy list. This is how real compound growth is built. Summary. So is 1 million yen guaranteed? No, but is it crazy? Not even close. If anything, what's crazy is how few people are taking this seriously. The drivers are here. Fundamentals, flows, reforms, and time. The rest is positioning. And if you're still waiting for some perfect confirmation signal, by the time it arrives, the train will already be gone. Most people only invest where it feels safe, where the crowd already is. But real returns come to those who act before the headlines catch up. If you've watched this video to the end, it means you're not like most people. You're willing to challenge what you've been told. You're open to rethinking what safe actually means. And that mindset, it's exactly what separates average investors from those who build lasting wealth. This channel isn't about hype. It's not about chasing the next hot stock or following whatever TikTok says is going to the moon this week. We're not here to gamble. We're here to understand. What you'll find here is long-form, data-backed insight. We focus on macro trends, capital flows, structural reforms, and undervalued opportunities, especially those overlooked by Western media. Everything we share is built from real research, real numbers, and a long-term global perspective directly from Tokyo straight to your screen. If today's content gave you even one new way to think about the markets, a shift in how you interpret risk, valuation, or capital rotation, then you're in the right place. This is just the beginning. So hit that subscribe button now, because what's coming next? Deep dive breakdowns, historical context, investor frameworks, and strategic positioning you simply won't hear about in the mainstream noise. We'll unpack complex trends, track shifts before they become headlines, and help you see not just what's happening, but why it matters. If you found value in this video, hit like to support the channel, and don't be shy, drop a comment. Let me know where you're watching from, what you're curious about, or what topics you want covered next. Your input directly shapes future videos. We're building something here, not just a channel, but a sharper, more strategic investing community. If you're tired of the surface level stuff and ready to dig deeper, welcome aboard. Let's grow together. One chart, one thesis, one smart decision at a time. Here's what we covered. Rand. The US market is facing a necessary valuation reset. Rand. Japan is structurally primed to receive long-term global capital. What appears to be a temporary spike is actually the start of a multi-decade trend. The idea of the Nikkei reaching 1 million yen by 2050 isn't fantasy. It's backed by compound growth and real economic reform. None of this is speculation. It's data, timing, and alignment. And now you have the blueprint. Every investor has a choice. Wait for confirmation or act with clarity. You've already done the hard part, you stayed curious, and you stayed through to the end. Now don't let this just be another video you watched. Let it be the one that shifted your perspective. Thanks for being here, and I'll see you in the next one. Stay sharp, stay ahead. Japan Market Samurai, signing off.